Hello everyone, welcome back to my channel. Today we'll be discussing about the topic assessment of firm. In the previous lecture, we had discussed about the meaning of partnership, firm, partners, firm name and features of partnership, also about limited liability partnership, features of an limited liability partnership and difference between partnership firm and limited liability partnership. Today, let us discuss about the types of partnership firms. For the purpose of assessment, partnership firms are classified into two types: eligible firm, which is also called as partnership firm assessed as such under section 184, and other firms, which are otherwise called as partnership firm assessed as association of persons under section 185. Let us now discuss in detail about section 184. In order to claim deduction under section 40B, a firm has to satisfy the following condition. First one is the firm must be evidenced by an instrument. That means to say, the partnership firm must be supported by an instrument called partnership deed. The individual share of each and every partners should be specified in that instrument. Third point is a certified copy of the instrument of partnership should be filed along with the returns of income tax in the first year. That means to say, a certified copy of the instrument of partnership deed shall accompany the returns of income of the firm for the previous year relevant to the assessment year. If once a firm is assessed as a firm for any assessment year, it shall continue to be assessed as firm for every subsequent year if there is no change in the constitution of the firm. Fourth point is if there is any change in the constitution of a firm or in the profits sharing ratio of partners, in such a case, a certified copy of the revised instrument of partnership, if any, must be submitted along with the returns of income for the concerned assessment year. Fifth point is there should not be any failure on the part of the firm in attending income tax proceedings and furnishing documents during assessment. That means to say, if there is on the part of the firm any failure to comply the returns of income, then in such a case, no deduction by way of payment of interest, salary, bonus, commission or remuneration made by the firm to its partners shall be allowed in computing the income chargeable under the head income from business or profession. And also, such interest, salary, bonus or commission or remuneration shall not be chargeable to tax in the hands of partners but under the head income from business or profession. Let's move to next slide. Other firms. A firm is considered as other firms in the following cases: when all or any of the condition under section 184 are not fulfilled, or when the firm commits any default leading to the best judgment assessment under section 144. That means to say, no deduction is allowed for any salary, bonus, commission or remuneration which is paid by the partnership firm assessed as association of person to its partners, and no deduction is allowed on any interest on capital paid by other firms to its partners, and interest on drawings is considered as deemed business income of the firm. And also, the same system of taxation applies to all AOPs and BOIs. Now let us see the conditions for claiming deductions of remuneration and interest under section 40B. If conditions under section 184 are satisfied, then deduction under section 40B is applicable. So the first point is remuneration is to be provided only to working partners of the firm. Second one, remuneration must be authorized by the partnership deed. Third one is remuneration should be paid or payable after the date of partnership deed is executed. And fourth one is remuneration should not exceed the maximum prescribed limit. Let's move to next topic, book profits. Book profit means the net profit as shown in the profit and loss account and after additions and deductions as per section 28 to 44D of the Act and increased by the total remuneration paid or payable to all the partners of the firm. Book profit simply means profit as computed in accordance with the provisions but before remuneration paid to partners. That's it for this lecture. Please comment below if you have any questions. We'll meet very soon in the next video lecture. Till then, happy learning. Stay tuned.